Hi, this is Gigi from the boringtrader.com website. Today I want to talk about something that I have been asked quite often. Why are my systems semi-automatic? What does it mean semi-automatic? Why are they not fully automatic? That's a very good question. A system is a set of rules that work together to achieve some results or a task. A totally automated system is one where these rules are codified and coded and executed by a mechanism that, once set, does not involve human intervention. These are the algo systems, where the human intervention, if you like, is on the monitoring of the rules or the setting of the rules, but not on their execution. So let's take this example. This is Australian dollar, US dollar, 5 minutes chart. If I tell my system to buy the first time this 2 histograms turn blue, and sell and reverse the first time these 2 histograms are red together, and I create a code that does it for me. This is an automated system. Obviously, this is not enough to have a system. This is just the entry point, but let's simplify here. In order to be effective, these rules have to be very simple, both because it is easier to code them and because it's less probable that we are overfitting the results. Okay, so let's say that every time this 2 histogram becomes blue, which is here, we buy just above, and we go on until we sell just below the bar where this 2 histogram became red. And it's a set and forget in a way, so I can leave the system there and come back in the evening and see what happened, which obviously I never do. The problem with this is that the system will not take into consideration anything else. All the system is looking for are these 2 histograms. Where this chart is not a concern of the system. So the system will make you enter anytime it looks at this 2 histograms. This goes many times against my judgment, and I just can't take some of the systems because I like price action. What happened here is that the bears were in control. They found some form of support, and the bulls were down in control. Now, I know that here it's likely that the bears will find support again. Maybe not, but it's a safe assumption. Well, it's a reasonable assumption. So if I have a signal here, the system doesn't really care that this was a support. All the system cares is that there are 2 red histograms, and the system will, below this line, below this bar, will sell. Now, in this particular case, it wouldn't be triggered, the order, so we were safe, but the order would have been placed. And this is something that takes me a fraction of a second to see this, but a system can't really see this. Obviously, you can try to code a more sophisticated way to understand that this is a support. This is way, way, way above my capabilities. So the first answer I can give to the question why my systems are not fully automatic is that, well, I'm not good enough at coding. But even when I tried some sort of professional coders, I always found that price action and the use of price action, so the filtering through price action of the signal of the system always, always, always gives a better performance. Einstein allegedly said that everything should be as simple as possible, but not simpler. So to me, there's a gap between that simple and simpler. My edge, if I have one, is my experience and ability to read the market. Well, at least I suppose I can. So if I can't code this into my system, I need to oversee it and filter the signals. This is extremely dangerous, as the probability of not being objective, not being able to replicate exactly the same circumstances, can be very high and can invalidate all the hard work we have done when testing the system. So the compromise solution that I have is that much of this filtering, this human intervention, if you like, is kept to a minimum, as the nuances are themselves rather fixed rules. So I have two kinds of filters, if you want. One is a filter that is quite relatively easy to code, if you like, and it's based on really strict rules, like the big round number, for instance, or if you want pivots or whatever it is that you like. These are not very subjective, they are quite objective, they are calculated in a specific way. The other element is a little bit more discretionary, and this is really my real discretionary part. And in my opinion, this discretionary part with most of the system is between 10 and 25%, but some people say it's much higher. I'm not sure. Anyway, let's look at an example. This line here is when I start trading. So I missed this rally here, and all I can do is, well, let's simplify this. But all I can look for a short. And I look at this, and there is one red and one blue, so it's not valid. At this particular point, on this particular bar, there is one red and another red. So this is a signal. Let's say that I'm completely automated, and this is the only rule that I have. I enter just below here, let's say with a stop up here. And as you can see, the market doesn't go down and starts going up. And we have here a reverse signal. So I would have lost a little bit more than half of this position, and I would be long now with a stop here. Now, this point here, it could be a valid point to enter. If I'm on a one-to-one, let's say, risk-reward, if I risk this level, I want to reach this level here. And the first thing that I can see is that if I want the market, if I wish the market to reach this level, I know that it has to pass this level here. This level is where the bears are making a a stand and are fighting the bulls. So this entry is not particularly good. And in fact, they didn't even test this high here, and the market goes down, and here you have another signal. And now you should go short. So you would have had already a couple of losses here with a totally automated system. And again, because this is the bar where the two histograms become red, the system will enter at this level here. But this is, for me, a totally stupid level to enter. Because look what happened last time the bears tried to push the market down. They met support. So at the very least, I would rather wait for the market to break this support and go down. In this particular case, the market didn't, because there is a support, and the support is confirmed here. So you see that by using the experience and the knowledge, and basically looking at price action, you can avoid quite a lot of losses. Actually, of all this, you would have taken the first short here. You wouldn't have reversed here because your stop would have been up here, and you want to, in order to go long, you want the market to get out of this point, and it didn't. So now you have a second chance to win on a short, and if you don't like it anymore, you have a chance to get out at break even. Let's continue on this example. Let's look at this level here. This level is a buy, blue and blue. So you would buy here with the stop down here. And obviously you will see that this is not a very safe place to enter. Well, not only you have this resistance line here, but if you want, you really can trace now this trend line here. Let me trace it a little bit better. This trend line here. So you would have had 2 or 3 reasons not to take this long. The system on the rules that I just explained doesn't know anything of these things. It doesn't really care. All it cares is about these 2 histograms here. So again, you would have had another loss. So of course there are much more to it than this, but this is, in a nutshell, my frustration, if you like, because I can't find a proper way to code a pretty big part of this price action. I tried several times. If anybody has any idea, please let me know. But believe me, I've been trying for several years. And the easiest thing for me is to just pick some markets, look at the price action, and filter accordingly. It takes me half a second to look at these kind of things. But unfortunately, I need to follow the market all the time, and this is quite well, boring and really quite demanding, if you like. I hope this explains a bit. I will have probably other videos on this, but this is a start. Thank you very much.